Welcome back to Beyond Four Walls, Conversations on Affordable Housing. I'm David Dworkin, President and CEO of the National Housing Conference, the nation's oldest and broadest affordable housing coalition. I'm joined today by Christopher Tyson, President of the National Community Stabilization Trust, or NCST, where he leads the organization's efforts to create pathways for families and communities to experience the benefits of homeownership. NCST advances affordable homeownership by lending capital to revitalize vacant single-family homes, advocating for homeownership policy innovation and reform, and facilitating transactions and single-family housing supply. Since 2008, the organization has facilitated the transfer of more than 28,000 homes, directly supporting neighborhood stabilization and housing supply nationwide. Before joining NCST, Chris made a transformative impact as president and CEO of Build Baton Rouge, securing over $50 million in funding to drive equitable development in Louisiana's capital. Welcome, Chris. I'm so happy to talk with you today.
Thanks for having me. Good to be here.
We're talking about two of my most meaningful projects, the recovery for blighted and abandoned homes following the 2008 crisis, Hurricane Katrina and Rita, and the impact in Louisiana. NCST has been so central to the latter. 2008 created right in the early days of the crisis, has played a really interesting role and has been incredibly agile. So tell me a little bit about that foundational story, but also the agility that you guys have kind of moved through the changing economy, because it's been a while.
Well, David, you go back to 2008, and you know well what that environment was like, as many do. And we know we had a foreclosure crisis, a glut of homes for which there wasn't a market, and a concern that how do we bring these homes back to market in ways that serve communities, in equitable ways that address the need to rebuild the homeownership gains that in many communities, especially across existing disparities, were wiped out in the aftermath of the 2008 crisis. And so NCST was able to facilitate transactions through its First Look program, working with the GSEs, working with other holders of distressed inventory, and connecting that inventory with community-based nonprofits, for-profit, mission-driven developers who in turn were able to flip those properties, repair them, rehab them, bring them back to market in ways that served affordable homeownership goals. And so NCST organized itself around that cause of advancing affordable homeownership, specifically with a focus on increasing the supply of affordable single-family homes. And that mission has continued to evolve as our challenges in housing continue to evolve. And we know the crisis of 2025 is not the crisis of 2008, to put it mildly. And so NCST, I think, continues to evolve with its eye on the North Star of expanding opportunities for single-family homeownership, but aware that the ground is shifting always around this. And there are many dynamics, some of which, didn't exist 17 years ago, and others that are on the horizon that we have to prepare ourselves for.
Tell me about that pivot then. Your predecessor navigated some of that, and then you're also facing a new economy. This is not an issue any longer of having a glut of vacant and abandoned homes. And today we have almost the opposite scenario, but not everywhere, as we know, and we'll get into the Neighborhood Homes Investment Act later. But how did NCST navigate that, and what's your vision now about its future?
Well, I think there are a number of challenges on the horizon that we see as threats to affordable homeownership. I know you've worked extensively and continue to work at NHC on the insurance crisis, which we know, particularly where I live in Louisiana, in South Louisiana, it is an acute and growing issue and challenge for homeownership. We know that the majority of our housing stock was built before 1980. which means that while we need to increase new building to kind of increase supply, we also have to address the existing housing supply. And how do we channel effective and affordable rehab solutions to homeowners so that they can remain in their homes, and to communities so that they can take distressed inventory and repurpose that for aspiring homeowners who are looking for affordable pathways. We know that there are policy changes that can be made at the federal level. We'll talk about the Neighborhood Homes Investment Act. Obviously, monetary policy impacts this with interest rates. So all of those are challenges that I think we had to survey and understand as we tried to pivot to continue to be relevant and bring solutions, working with partners on the ground. And we're very much driven by a practitioner-first approach through our Homeownership Alliance, through our community buyer network. We get to hear what's happening on the ground in community. So all of that kind of directed that path towards evolving to address these current and emerging challenges.
Yep. Practitioner first approach. Tell me what that means.
Housing, as we know, is incredibly shaped by federal policy, national monetary policy, and all of the devices that we have and have had for almost 100 years to shape the homeownership experience in the United States. But we also know that what happens in D.C. is different than what happens in Baton Rouge, it's different than what happens in Dallas, it's different than what happens in Los Angeles, so on and so forth. So in order for us as advocates, as facilitators, as problem solvers and innovators to deliver relevant insights and knowledge to our partners here in DC, we have to be connected to people working in the diverse communities of the nation, the diverse housing markets, whether that's a ranch home that you're trying to get or a row house that you're trying to get, multifamily, condominiums and other things. All of these various options for home ownership vary by housing market. And so working with local practitioners is important to keep us honest, to keep us on top of these variations. And so that when we're speaking to partners here in DC and they cue up all of the memes about Beltway think, right? Bringing out
guilty as charged.
Bringing out of the Beltway perspectives is important. And frankly, I think is essential to our credibility.
Well, I always say that our most important members are the ones with mud on their boots, because you actually know what's happening and educate me a lot. Who are some of the folks you're working with throughout the country?
We have, NCST's board is made up of some of our longstanding affordable housing champions and community development leaders, including LISC and Enterprise, Unidos, HPN, NeighborWorks, but we've also had representation from ANDP in Atlanta, working with John O'Callahan, and that's a partnership that continues. We've worked with neighborhood housing services in a number of cities, including Chicago, including Birmingham now. We do a lot of work in Baltimore, Healthy Neighborhoods, Neighborhood Impact Investment Partnership. So there are a number of local organizations that have been longstanding community buyers of NCST and have now evolved into partners for our lending efforts, for some of our other community development efforts, particularly around heirs property and dealing with the climate impacts to housing. Those are national partners like Freddie Mac, local partners like ANDP, Healthy Neighborhoods Baltimore, NHS Birmingham, so on and so forth.
Well, and John has been a guest on the podcast. And so tell me a little bit about, from your perspective, about how you work with an organization like ANDP in Atlanta.
Well, I think ANDP is a great example because they began as a buyer. They were purchasing, distressed properties as they sought to deliver affordable solutions in the Atlanta market. They are a pretty prolific affordable housing developer and focused on home ownership. So they became a founding partner of our Homeownership Alliance, which is our kind of practitioner-led collaborative that kind of brings that ground up perspective that informs our policy insights, recommendations, and proposals. And so they became a part of that. John served on our board. He continues to be a source of expertise and knowledge. And he has not only, kind of focused that in the Atlanta market, but I think John has reached beyond there to be active in a number of areas. Many of our partners have started with us as community buyers. And, David, we can go back to the NSP days. And we know that nonprofits had funding to do this work in the aftermath of the 2008 crisis. And we were one of the places they were able to go to get funding.
NSP is the Neighborhood Stabilization Program.
Yes.
That was a government program to help fund some of these rehabs. Is
Absolutely,
that right?
Absolutely. And when I get up from here and we end this, I'm going to think of some other partners who are jammed in my head right now. So if they come to me, I'll bring them too. But I'm saying that because there's so many examples.
Yeah. It's great.
And we move around the country and we hear from people who will tell us, look, in those early days, NCST was the source for the work that we did and the impact we were able to have.
So we're talking about really pretty significantly home rehab, and racial equity is a big part of what you do. And somehow that ended up on some kind of a unwoke list, I guess, but not for me. Seems like fairness shouldn't be particularly revolutionary. Tell me a little bit about how you factor that in terms of impact. What does home rehab look like in some of these neighborhoods?
Those are kind of two parts. So we'll talk about equity and racial equity in particular, and then talk about home rehab and the impact that has. And for that, I want to draw on some prior experiences that you kind of mentioned in my bio as well. So we know that the entire home ownership experience in the United States and what it means to own a home is in significant part a result of deliberate federal policy through the New Deal and around that time that sought to create and grow a middle class by creating a pathway to own an asset, your home, to grow wealth there, and all of the things that redound from that. And we know that in those initial decades, that process was incredibly racialized. Right? From 1934 to 1960, 98% of the loans underwritten by FHA went to white borrowers. And so that, and then on top of that, restrictive covenants, the violence, redlining, a whole host of tools racialize the experience of homeownership and wealth creation, such that we have the racial wealth gap that exists today, which is largely a reflection of disparities in homeownership and home equity. Even when African Americans and Latino folks own homes, they tend to have less equity. Their homes tend to be appraised for less. They tend to be undervalued. And all of those things reflect a lineage of structural factors that were the result of policy. And frankly, I believe will only be fixed when we have policy that addresses it, shifts those balances to open up pathways to opportunity. We know in 2008, the scant gains that were made in Black home ownership were almost erased. We're almost reset to the 1960s. And so, we could have a whole podcast just on that.
But it's, I think, important for people to recognize that this isn't about giving people something that either they're not entitled to or haven't earned or something new. This is really about giving folks something that the rest of us got a long time ago. And, I'm a perfect example of that. I wasn't born on second base. I certainly don't think I hit a home run, but I was definitely born on first base. And the reason was that I have a father who is a first generation homeowner. And that's because he served in World War II and got the GI Bill benefits. And the Black corporal, who he never knew because they weren't even allowed to serve together, was eligible for those benefits. He just never got them because of the redlining that was going on, in part driven by government policy. And the benefit, the privilege that I've enjoyed as a result of that is that I say it's the big three. One, I got the daddy down payment loan, and that was funded by family wealth that was generated in part by that homeownership experience. Second is that I got my dad's advice throughout the entire process, and that was essential to helping guide me through that. And that was based on his experience, which he'd gotten as a result of these programs. And the third is that I grew up with a presumption that I would become a homeowner. And if you're in a looking at becoming the first generation homeowner in your family, that's just not there.
And also in spaces that were segregated by design, where we, through all devices of financial policy and private market activity, local government tactics, declared which areas were worthy of investment and which were targeted for disinvestment. And that kind of takes me to your second question about home repair. Prior to NCST, as you mentioned, I served as CEO of Build Baton Rouge, the city's redevelopment authority and land bank. Very proud of that work. But there I was dealing with my hometown of Baton Rouge, which is effectively, was then and still today, a tale of two cities, right? Or two tales of one city, however you want to call that, where you have South Baton Rouge, which is the highest concentration of wealth and affluence in the entire state of Louisiana, and North Baton Rouge, which is the highest concentration of poverty and disadvantage. North Baton Rouge is probably over 85% Black, and in a city that is about half, a metropolitan area that is about 50-50. And so if you have owned a home in an old line Black neighborhood, you likely have lost value over time on an inflation adjusted basis. We also know that Black communities are lower earning communities. There's less public investment. And so there is rampant disrepair of housing. And there aren't the kind of gentrifying factors that you see in larger markets driving market activity that will then lead to the types of investment that you see in other declining neighborhoods and much more dynamic economies and urban landscapes, right? So I know I'm saying a lot here.
But no, it makes perfect sense. And I think it's important to remember, this doesn't mean that white people who benefited from these policies did anything wrong per se. It's just a question of everybody should get access to these benefits. And there's no question that the economy of the entire city benefits from having better neighborhoods across the board.
Or suffers.
Right? And, well, that's right.
When they absolutely do. And I think when you look particularly in cities like Baton Rouge, but also in the mid-sized cities of the Sun Belt and the Midwest, where you see concentrated disinvestment, blight, and decay, we know that within 100 feet of a blighted home, there's going to be crime. We know that all types of negative health outcomes are correlated with its food deserts, all of these things. And that's not contained to one neighborhood. It corrodes the economic viability of the entire community, even behind the gates of the wealthiest neighborhoods and subdivisions. And so if we care about urban revitalization, if we believe that that's tied to sustainable economic development that makes metropolitan areas attractive for young people and mobile capital and investment, then we have to care about all of the city, and we have to recognize too, because here's the problem. For many people, they drive through neighborhoods like that and they assume that they are observing just kind of mass pathology, right? These are people that don't have good values or they've done something wrong. And there's this whole superstructure of policy and finance and government at the federal, state, and local level over time and the compounding effect of all of that. And what you're viewing is the cumulative impact of all of that, right? Like it's to say that this is what we should expect given the policy history that we know exists. There's no urban crisis. This is the logical result. Right. Of decades of policy, in some ways centuries. So we have to change the understanding, because I think if we see residents in those communities as wanting the same things as residents anywhere, and by and large that is true.
Well, and we know it's true because when we see additional resources being brought to those communities and financial options, they prosper.
Yeah.
They turn around. We watch it happen.
They stabilize. And so in many cases, going back to your question about the need to rehab in dealing with difficult communities and situations where you have concentrated blight and poverty, you have to center people. You have to respect and acknowledge that they are the experts on their communities. You have to begin there. And then you have to bring all of the tools of public finance, of land use planning, zoning, of kind of bricks and sticks of real estate development, understanding the political and policy landscape. You have to kind of hold all of that simultaneously
Which is a lot.
It's a lot to kind of fashion solutions to address those issues. It's long cycle work, which is difficult to kind of reconcile with short-term political cycles
Sure.
and the very real and valid complaints from people who have lived so long in these neighborhoods that they want change now and they deserve change now, but it's hard to have instantaneous impact when you're trying to rechannel resources and marshal political will that has never been there. So it is incredible work. Hats off to community development professionals around the country who labor in this way in communities around the country. I'm very proud of that work. It is difficult. It is tough, but it is worthy, and it is the only work that is going to make a difference in our communities. The only work that's going to make our communities safer, at least say that we care about safety, and yet we allow certain people in our community to live in cycles of scarcity and deprivation that are unnecessary.
Right. And unnecessary, I think, is one of the key words there. You mentioned gentrification. You talked about displacement. This is really, I think, the biggest challenge to talking about this sometimes is this fear of gentrification and within these communities. And I think what we're really talking about, because I hate the term gentrification, because what we're really talking about is the fear of displacement, as opposed to investment, which we want.
Gentrification is such a troubled term because it is it's a million things and it's nothing. People fill that with a whole bunch of things. What we're concerned about is reinvesting in disinvested places in ways that do not lead to displacement. Right. So as you said, our primary concern is displacement. That displacement usually occurs in very supply constrained markets where we have very dynamic economic and demographic profiles, right? Waves of new people coming in seeking housing. Scarcity pushes them into neighborhoods they wouldn't otherwise go. That therefore drives up demand in those neighborhoods. It drives up the price. Ultimately, that redounds to how we tax those neighborhoods, and that makes them unaffordable for people middle to the bottom who the whole time wages aren't really changing and their options aren't changing. And we kind of know that story of economic disparity, which defines the current moment in the country and has for a number of decades in acute ways. So that is not happening in every market, right? It's a handful of markets that's a risk in.
There's a very broad fear, but in practice, it's a very small group of communities that are struggling.
Prior to Bill Baton Rouge, I'm a law professor at LSU in Baton Rouge, teaching on real estate development and property and urban land use and development and local government law, and have written a lot about this and thought a lot about this. And I would say in Baton Rouge, I said, look, this is, as I described, it's kind of a tale of two cities dynamic. Baton Rouge is a very kind of even keel place. It doesn't really boom. It doesn't really bust. It's a state capital. It's a university town. It's, it's an industrial base. Doesn't change a whole lot. There are no forces that are running up prices in South Baton Rouge that force, which is the wealthy part, and force people into North Baton Rouge such that we're going to see a dramatic rise in prices and displace the people that live there. Obviously, marginalization by displacement, which you have in most cities, right, is marginalization by invisibility. It simply is not necessary to live your life in Baton Rouge to really encounter North Baton Rouge, right? There's no shopping amenities there. If you don't live there, there's no other reason to go there, and those communities remain isolated. And they're not only shut off from capital and investment, they are outside of the purview of most people's experience of the city, right? So there's an invisibility factor there, and that's many mid-sized metropolitan areas. And as I've gone around the country and talked to people, when I kind of lay out that dynamic, people start clapping. They're like, yes, that's our issue. There's not a displacement issue here. It's how do you get investment to places where they're effectively anti-markets, right? Market activity is not happening. Property values are not growing. Transactions are not happening. New business starts are not happening. The corridor is blighted, the commercial activity, and so how do you drive investment there in sustainable ways that center the needs, the immediate needs of the communities that live there, right? And that doesn't look like a Starbucks on every corner, right?
Right.
Which is what we think about revitalization. It means different and innovative and bespoke localized solutions to bring economic activity and stability to those areas. Again, the crime is heavily influenced by the blight.
Mm-hmm.
So if you
Well,
can, if you can fix that,
yeah.
put eyes on the street, bring neighbors back out of their homes, you impact crime, get people to work.
Yeah. People working, people investing, people having places to shop. I
Yeah.
mean, one of the things I always say is, and nothing against Starbucks per se. I mean,
Yeah, and
there are people
no
on the
slight to
no, but I
Starbucks
mean,
and
there are
my
people on the
friends who work there.
people on the Upper West Side who feel like of New York who feel like there are too many Starbucks in town. But the reality is that people in these neighborhoods, they want healthy grocery stores. They love good coffee, and we want a robust economy.
They
That
want new
investment
homes.
is incredible, and
Yeah.
they want homes that appreciate in value.
And they don't want overgrown vacant lots, and they don't want criminal activity to fester in the blank spaces that have been allowed to exist because no one has thought about investment. And you and I know that there are a number of public finance tools that, when properly marshaled, can help catalyze that kind of investment and development. But there are challenges of political will. There are challenges of just the operation of local government at the local level, state government increasingly as we, experience a wave of preemption from state legislatures around the country and over local affairs. So it's, again, topics for an entirely different discussion.
Yeah.
But that experience, kind of took, and I've before that worked in community in a number of ways, done a lot of youth mentoring. I've been a transit advocate, chaired Baton Rouge's transit agency. And so have long kind of thought about these issues of urban development and disparities at the level of people, but also at scale and at the level of policy and, solutions. So a lot of work to be done there. And I think there's a continuing need to educate people and have these conversations about what we mean when we talk about these divides and the history and why they exist, and that it's not just about, it's not just a bunch of people who made poor choices. It's about a nation that made poor choices.
In a nation, and this is not pejorative, that has always struggled and is struggling now with the ability to communicate with each other and to listen to each other.
Yeah.
And you see that I often note that, my wife is a couples therapist, and you see this down to the most micro level of two people who already love each other, to entire communities who don't even know each other, and everyone in between.
Embracing the concept of linked fate is key, and I think that's something that we've lost. And this is the tension always in America, right? The tension between independence and interdependence. And I think we make a fetish of the former, and we grossly underestimate the latter until catastrophe strikes.
Yeah, and they're both important.
They're both important.
So let's talk about now scaling the work you're doing, scaling rehab in distressed communities. What are the biggest barriers to that, and what do you think are some of the biggest opportunities ahead that either exist or that we need to create?
Well, NCST is proud to partner with LISC and NAL, National Association of Affordable Housing Lenders, on the Neighborhood Homes Coalition, which is in support of the Neighborhood Homes Investment Act, which is bipartisan, bicameral federal legislation that proposes a tax credit for the rehabilitation of single-family homes. And it focuses on...
And NHC is a member of the coalition.
Yes.
And a vocal advocate for the legislation. So help us understand, what is the bill and how does it work?
So again, going back to my experience in running a redevelopment authority in a land bank, right? I've got all of this blighted, vacant property, much of it tax adjudicated and abandoned. And ideally, you want to move that property into a land bank. You want to clear title to that property, and then you want to find developers who will rehabilitate that property and bring it back to market. Standing in the way of that, right, is the valuation gap. Is the reality that it's likely going to cost more to rehabilitate that property and bring it back to market than it's going to appraise for on the market.
At least initially.
Yeah, at least initially. And so that disincentive, at the scale of a scattered site single family development.
And so what we have then is we could have two neighborhoods very close together that in one, there aren't enough homes and prices are going up and people's kids can't even afford to buy in their own neighborhood. And in another, you actually can't buy the homes because they're too inexpensive and the cost of fixing them up actually exceeds the amount they're going to be worth. And we want that neighborhood to catch up because that solves two problems, right?
Exactly. And we want to do so in a way that really targets and bolsters home ownership, that allows owner occupants to be the beneficiaries of that benefit, brings capital off of the sidelines and back into play in these long disinvested communities. And so the Neighborhood Homes Investment Act strives to address that. It's an innovative, timely solution. Shades of it have happened at the local level in communities, but this federal solution, and many people liken it to a LIHTC, low-income housing tax credit for the single-family home development. We know that much of our multifamily affordable development over the last 40 years has been facilitated by the low-income housing tax credit.
Incredibly successful, yeah.
Incredibly successful national policy, tax policy. And so similarly, the Neighborhood Homes, Investment Act draws from that with a focus on single-family housing. And we know what the headlines are saying about the increasing inaccessibility of home ownership. And there are a variety of factors around that. Supply is one of the drivers of that. And as I mentioned, we have so much of our housing stock that is decaying in our communities, and capital's on the sidelines, and we have to be innovative and proactive and aggressive to bring that capital back to market. And we're excited about the prospects for the Neighborhood Home Investment Act to do that. So that, I think, is a great way to scale. NCST recently was certified as a community development financial institution through our Developing Affordable Starter Homes, or DASH, initiative and an entity. We have been working in Baltimore initially for the last few years to support emerging developers with low-cost, flexible capital that allows them to bring distressed vacant property back to market specifically for the benefit of owner-occupant purchasers.
So what does DASH stand for? And tell me how it works.
Yeah, Developing Affordable Starter Homes. And this is a loan fund for emerging developers. So if you are, again, this kind of goes back to this valuation gap, right? For small emerging developers, they're not the big guys. They don't necessarily have relationships with commercial banks. They're usually under the radar of commercial lending. And so where do they have to go to get capital to do the work in the communities that need it the most to bring affordable options to market? They typically have to go to hard money lenders. And that capital can be very expensive. It can be very risky. And if you're a small developer, you could end up losing your shirt trying to not only grow a business, but also improve a community that has been left behind by the existing capital sources. So we brought a capital solution, mission-driven capital, to benefit those emerging developers, flexible, low-cost capital, flexible for a variety of upstart developers who are trying to grow businesses, so that we can partner with them so they can grow their business. And at the same time, we can experience new supply, quality supply, specifically directed for owner-occupant purchasers.
And how's that going?
It's been going well. We obviously are looking to scale. So we closed the first fund. We're about to launch the second one. We've got some great partners in Baltimore. The city of Baltimore has been a partner in this. The Neighborhood Impact Investment Fund has been a partner in this. And so we're just thrilled to continue working in Baltimore, thankful for so many partners who have stood with us. It's tough work. It started out, rates have changed, the economic environment has changed. It takes a while to get on the ground and have people know you and know that your product exists. And so, but we've been working in real time to make sure that we are presenting something that really is of value, a true value add for the community. And we're proud of the projects that have been completed, the homes that have been purchased, the new homeowners that have been made, and looking to do more.
Well, I'm a direct beneficiary of that. We've just had our first grandchild and born in Baltimore. The house is being rehabbed right next door. So Hugo, my first official plug for Hugo, there will be many more. I'll warn my listeners that is going to be a direct beneficiary of this kind of work. There's a couple of tools that you also use in this space. Let's, do a little bit of a lightning round here. Tell me about the REO Match platform.
So REO Batch is our legacy tool. That is the platform where we connect mission-driven for-profit developers and nonprofit developers with an inventory of distressed and defaulted mortgage property, be it through FHA, be it through our partners at Freddie Mac or a number of other servicers. We offer that on a first look basis, and those nonprofits have the ability to purchase that property through our platform so that they can go on and create affordable options in their respective communities.
And NCST's First Look, how does that play
Yeah,
into all of
so
this?
that's a part of that REO Match transaction platform. And First Look just refers to the system of giving priority and privilege to those qualified buyers in our community buyer network to have access to have a first look at property before it continues through the traditional foreclosure process.
The Acquisition Bridge Fund?
Very excited about the Acquisition Bridge Fund. We have launched that in Detroit through the generosity of the Rocket Community Fund and the Wells Fargo Foundation. We realize that in many communities where we have severe constraints on supply and you have affordable homeownership seekers who are relying on a bevy of benefits that thankfully exist to help you with homeownership, like down payment assistance, like special purpose credit programs, those programs often take some time to get to close, and that time can make you less than competitive in a tight market. And so the Acquisition Bridge Fund is just that. It's a fund where NCST steps in with your borrower, and they are our takeout partner, to acquire that property quickly. And we have our kind of expedited vetting process on behalf of that purchaser so that they have the time to process down payment assistance, to process your new home buyer, and you're going up against cash buyers. You're not going to be competitive. And so we slow down that process and assist those prospective aspiring home buyers with getting the home of their choice in these very tight markets. Our partners in Detroit kind of told us that this was a problem. We were able to put that solution together, and we're getting that off the ground and with them and really excited about that.
Well, I'm always happy to participate in a shout out for Rocket and Wells Fargo.
Yes.
They are very generous supporters of NHC. Rocket, in particular, has such deep roots in the city of Detroit, as do I. It goes back to the Blight Task Force. They were instrumental in creating and making successful, and then continuing to do the hard work along with Wells and others to help bring these neighborhoods into a really promising future. That's a hard slog because, as you know, Detroit has a lot of blighted neighborhoods still, but also a track record of turning some things around, which has been very exciting.
Absolutely. So we're very thankful for our partners there and excited to get the Acquisition Bridge Fund off the ground.
You've learned a lot in this space and in other spaces you've been in. We scale that learning, balancing the acquisition costs with the rehab needs and keeping long-term affordability in mind. Tell me how you take these lessons now and look to the future, and what does the future look like for us?
I think there are opportunities for increased learning through partnerships. NCST is preparing to have our third annual homeownership policy symposium to bring together experts to do deep dives on homeownership policy. So we're excited about that. We are scaling up our lending effort and looking to branch Dash into other communities with a host of partners. So we're excited about that. And I think the insurance issue is one that we're increasingly focused on, as you all are, and through so many partners. Again, just continuing to beat the drum around affordable homeownership. We think that it is a growth area in our housing discussion and our housing coalitions. We certainly need multifamily properties. We certainly need rental properties. But we know that so much of what we think about as the American dream, what families aspire to, revolves around homeownership. That isn't always the best option for a family, but we want it to be a viable option. And there's a lot more that we can do. And so we're just so excited to work with so many partners on that and excited about the future.
So one of my favorite questions that I ask all my guests is really helps us get to know you personally, Chris Tyson, although I know your work forms a lot of who you are, not all of it. What's the most interesting and important fact about you that has nothing to do with your work?
I'm torn. I'm really like a 70s, 80s soul music, soul and R&B aficionado. I will claim that and happy to go toe to toe about that. I love the stage. I won't call myself a theater kid. I've done little theater and kind of a lot of speaking growing up, and then done some little theater in kind of college and the years after. Love that tremendously. Wish there was time in my life where I could make space for it. At various times in life when I've had breaks before going to grad school or something, after graduating college or something, I did an audition and did a play or something. Love it. So would love to have the opportunity to do that again. It's kind of on my, list of things in life that I want to get back to. Yeah. There you go.
There you have it. It's that's really awesome. And the next time you're on the stage, I hope you'll send me a couple of tickets. I'm happy to pay for them, but I'd love to see you in action.
May have to wait a while, but yes.
Yeah. All right. Great. Thank you so much for coming here and being on the show. And I love working with you. It's always a joy to get together when we're on the road, and really appreciate you coming and doing this.
Thank you for your partnership, for this invitation, and for a great discussion.
Thank you for listening to this edition of Beyond Four Walls. You can visit the National Housing Conference at nhc.org. There you can learn more about affordable housing policies, affordability challenges throughout the nation on our Paycheck to Paycheck database, and explore membership in NHC for you or your organization. We appreciate your interest and look forward to working with you in the future. Until next time, I'm David Dworkin, NHC's President and CEO, wishing you a great day.